Welcome back to Crypto Unlocked. I'm your host, Crypto Daryl. And whew, it's cold. It's so cold outside. Babe, can you turn up the... You know what time it is. It's crypto winter. Hey, don't say I didn't tell you. Now let's get into today's video. Some days in crypto feel slow, some feel very chaotic, and then you get the days like today where the entire landscape shifts beneath your very feet. And you can feel the cycle evolving in real time. Today isn't just another news day. Today's one of those rare moments where regulation, global policy, institutional positioning, and raw market psychology all collide at once. And if you understand how to read those signals and that pressure point, you will understand where the next phase of this market is trying to go. Let's start with something huge that most retail investors haven't fully absorbed yet. Japan, one of the world's largest and most technologically advanced economies, is preparing to classify Bitcoin and Ethereum as financial products. Not commodities, not risk assets, not some separate category, financial products. The same box as stocks. That single regulatory shift changes everything because the very moment a G7 nation treats crypto like a traditional finance is the moment institutions get the green light to enter without restriction. If Japan follows through on tax relief and financial product classification, you're going to see a flood of capital and corporate money coming in from the East like we've never seen before. And that ripple effect spreads globally. It tells other nations this is where the world is moving. But it doesn't stop there. Analysts like Tom Lee and the team at Bitwise are doubling down on something they've hinted at for months, that Bitcoin and Ethereum aren't anywhere near their full potential market. They're calling this the early stages of a supercycle, not a temporary rally, not a hype-driven bull run, a structural multi-year expansion driven by the fact that crypto still represents a tiny fraction of global wealth. Think about that for a second. Bitcoin is becoming harder to buy. Institutions are accumulating, ETFs are pulling up supply off the market, and yet crypto's global footprint is microscopic compared to equities, bonds, real estate, and commodities. When you zoom out, the upside isn't just high, it's mathematically enormous. And that's why the smartest money in the world isn't panicking at the dips, they're preparing. Speaking of dips, Bitcoin slid again toward the mid 90K, around 94K, despite a wave of bullish headlines. And here's where people misunderstand the market. Price and narrative don't always move together. In fact, they often diverge before they make a major turning point. When good news hits but price dips, most retail traders panic because the market isn't reacting the way they expected. But smart traders know what's really happening. Liquidity rotation, accumulation, and healthy resets. Bitcoin had billions inflows just weeks ago, and now you're seeing a cool-off period where the market digests that move. You're seeing short-term traders exit while long-term holders continue to accumulate. There's nothing unhealthy about that. It's how strong floors are built. Now let's talk about XRP, because while Bitcoin cools, XRP is doing the exact opposite. It's approaching a breakout zone that could send it into the next phase. With ETF speculations heating up and Ripple Prime becoming a real institutional gateway, XRP is stepping back into the spotlight. The $2.60 resistance level isn't just a chart number, it's a psychological barrier that carries years of history. This is the same zone where previous cycles peaked, where retail lost faith, where momentum collapsed. If XRP clears that level with volume, you're looking at a real path towards $3 and beyond. And for the first time, institutions might be a part of that move. Now, here's the part that nobody is talking about. Several major cryptos are showing early signs of rebound despite fear dominating sentiment. These aren't just hype pumps that are coming. These are quiet, subtle signals that happen before the crowd realizes anything's changed. Low time frame reversals, higher lows forming, volume stabilizing, and key levels are holding. That's not bear market behavior, that's accumulation behavior. And it's exactly what happens before altcoins begin their rotation. When Bitcoin cools and consolidates, altcoins start searching for that momentum. The XRP breakout, the resilience from ETH, and the early signals from select projects are telling us one thing: the market isn't freezing, it's recalibrating. And the recalibration becomes even clearer when you zoom into macro conditions. Japan legitimizing crypto, Bitwise forecasting long-term structural upside, institutions positioning for a multi-year cycle, Bitcoin cooling but not collapsing, altcoins preparing for that absolute rotation. XRP testing a historic breakout. These are not ingredients for a crypto winner. These are the ingredients of a market catching its breath before the next leg. But here's the real kicker. Bitcoin's dip to 94K wasn't accompanied by panic selling. It wasn't driven by fear. It wasn't driven by collapsing volume or even minor capitulation. It was driven by risk-off sentiment surrounding US-China trade discussions, temporary liquidity shifts, and exchanges receiving a wave of BTC as traders reposition. So what does this all mean for you and I? For everyone watching this who wants to navigate this market instead of reacting to it emotionally, it means we're in the middle of a cycle of transition. It means Bitcoin cooling doesn't equal collapse, it equals opportunity. It means macro adoption is accelerating, not slowly. It means infrastructure plays like Quant and liquidity plays like XRP are lining up for that very moment. It means Solana becomes a buy on dips asset again if it revisits deep discount levels. And it also means Tesla, your real world tech anchor, keeps bridging the gap between traditional markets and the high-tech AI-driven future that crypto will eventually power. The market isn't dying, it's evolving. It's shifting from emotional trading to structural adoption. It's moving from retail-driven rallies to institutional-driven accumulation. And every single news headline today supports that actual direction. Japan opening the gates, analysts calling for super cycles, XRP pushing towards ETF-driven momentum, and also Bitcoin resetting in a healthy way. This is not the start of a winter. This is just a quiet before the next acceleration. And this is where staying disciplined matters more than ever. This is where sticking to your long-term strategy will pay off. This is where the market tests patience, conviction, and emotional control. And this is the difference between those who thrive in their next cycle and those who get shaken out before it even starts. If you've got Bitcoin, hold it. If you've got Quant, understand that interoperability becomes essential as regulations tighten. If you've got Tesla, remember this right here. They're the bridge between AI, energy, robotics, and the digital economy. And if Solana dips hard, stay ready, not scared. This is how winners move in times of transition. As the market shifts, cools, resets, and quietly prepares for the next move, the most important thing you can actually do is make sure you're trading on a platform built for every single season. When sentiment flips back and forth, when liquidity dries up for a moment and then surges the next day, that's when execution, reliability, and stability matter more than anything. That's why I always trade with BTCC Exchange, and they have been around since 2011. They've seen every bull market, every crash, every bear market, every winter, every recovery, and they've survived everything that the industry had to throw at it. That kind of longevity is rare in crypto, and it's the reason why I trust them when the market is unpredictable. Whether you're holding Bitcoin for the long haul, trading Ethereum or XRP during this volatility, or positioning into projects like Quant or Solana on key dips, BTCC gives you the deep liquidity, fast execution, and the kind of consistency you need when the rest of the market feels uncertain. And that's the part that really helps your bottom line. When you use my link in the description, you get 10% off of all trading fees for life. That's real savings in every single trade that you enter or exit. More money staying with you, less with the platform that you're doing it on. So stay ready as the market continues to shift. I appreciate you guys so much. Thank you for tuning in for yet another week, and I'll see you guys on the next one.